Hello, YouTube. The stock market is having its worst day in 2022. We have the S&P, the Dow, and the Nasdaq all down by at least 2%. So with the worst day of the year now in, we're going to provide an update to the stock market crash because what I just circled here is what I think is happening. We are starting a trend change. If we look to the heat map for today, there is no shortage of red. It is red in every sector. It is red on almost every single block. So tell me, Justin, what do I need to know going into tomorrow? Well, here's what we talked about on the weekend. I think that a potential trend change was happening. Here it is. It's starting to happen. So we'll give you an update on that right now. What happened? Well, here's where, if you go back and watch the weekend deep dive, I would really encourage you to do that. We'll leave that at the end for you. But here is the synopsis of it. At the bottom, we had 3 lower wicks. We confirmed on the third candle we were going to go higher by what? A gap up and by being over the all of the previous candle highs. So we got 1, 2, 3. On the third candle, going into the fourth, we were over the first candle high, the second candle high, and the third candle high. That's what led to the start of the rally that we had for this year. Well, now let's look at the opposite side here. We look at the top. There's our first bar. There's our second one. There's our third one. But on Friday, we actually closed out with a doji and we reclaimed the previous weekly low, which means it was a failed breakdown. It broke down, but failed to hold it. Well, what do we have now? Riddle me this. First bar, second bar, third bar. There's the low or the corresponding high for the first candle. We just closed below it. We just lost our 50 weekly. That's pretty significant. That's exactly what I called out on Sunday. So I think that now that we understand where we're coming from, where are we going to go, Justin? Because this is what's really important right now. Well, let's go through a few more things to try to get a sense on it. And then I'm going to leave you with a message at the end, whether you did well or not well so far this week. We talked about OPEX. Here we're looking at the 400 to below. I snapped this earlier today. What I'm looking at is the 16s for SPY going out to March, which means I just want to see where people are positioned. And they're already positioned for a move lower, 400 to 395 and lower. We know those areas are important. So we had updates from a lot of people today. Let's actually look at what those are. We had updates from Russia. We had updates from all this stuff. I don't want to get into all the negativity. So I encourage you to watch the weekend deep dive if you want to know more. But we're not even at one of the high volatility days of the week yet. It's going to be Wednesday, which is tomorrow, and then Friday. So, man, it's already bumpy. Worst day of the year. I have to also say that what usually happened, because just before I started recording, usually, right, breaking news from CNBC, Dow closes down 700 points for a broad sell-off as the index caps their worst day of 2023. Usually, it's called the worst day since. Today, they're just saying worst day. When they start saying worst day since, just like they did for worst day in 2023, some of the worst days are usually followed by some of the strongest days. So I don't want to get too ahead of myself. I think that if we would have closed here on Friday, I would have said, man, that's a win. That's what I wanted. Why? Well, we came right back down to strong support here on the weekly. That is so important for me. Why? This is where I expect to find buyers. We have convergence of the 50 weekly moving average. We also have our daily chart, which we had a head and shoulders. Now we got the knees and toes. We talked about strong support being at our gaps going back here to June, 401. We also had the monthly low at 402. We have our 50 MA. We got our 200 MA. We've got our June gap at 395, 396. It's that exact area they're targeting on the options chain. So trust me, everyone's aware of what's happening here. But here's what I think is missing. A little bit of humility, I think, from both teams. Why? I'll tell you from experience. Bulls and bears, when they get too perma, right? The saying is that perma bulls and perma bears are pigs, and pigs get slaughtered. You have to play the trend. And what's been difficult is that this has been an unusual market. We talked about the W that was forming versus formed. And once we lost our uptrend, which happened until late last week, I started to not know what we're doing. Now I feel a lot more confident. Our head and shoulders led to a knees and toes. I'm watching what's going to happen on the 50 DMA here. Why? We talked about this pattern on the Dow where we have our short-term head and shoulders, right? If it's a line chart, it's going to be removed, crash landing to the 50 shortly after a golden cross. Check. It just took a little bit longer. They have to burn the options before they allow the chart to go lower. So that's the first thing. Second thing is that I think the bulls got a little bit too high on their own supply on this move higher. I started taking a lot of profit into this last push higher here, started just positioning, trading, and now I'm net short. For how long? We'll find out. I trade, and at the end of the video, I'll leave you with a little bit of commentary in regards to what I learned over more than like 13 years of trading. Because if you want longevity in this business, you have to realize that humility goes a really long way. Let's read the definition. And if you're enjoying the video so far, I would really, truly appreciate if you could smash that thumbs up. And please just consider subscribing to the channel. I'm not going to hard push it. It would mean a lot to me personally, and I'm trying to follow up and give you value every single day. Humility, a modest or low view of one's own importance or humbleness. What's the key words here? One's own importance, getting too high on one's own supply. I saw the bears doing that all the way down here. So thank you, bears. You guys are a fantastic signal. When you guys get super bearish and you're like, oh my God, he's bullish. Let's tell him why he's wrong. Instead of trying to understand what he's telling us. Well, it was a great signal for me. So I saw that exact same thing happening here at the top, where the bulls are getting euphoric. They're getting excited. They are unwilling or unable to listen to the downside. What happened? Man, humbleness came real fast. And that's what I think is missing here. We don't even have the highest volatility days of the week yet. This could be a down day. It could be an up day. It's just going to be a high volatility day. So I'm watching really close. So if you're bullish or bearish, just understand that you need to know what the trend is. Meaning, are you bullish or are you bearish? But do you track the daily chart? Do you track the weekly chart? Or do you track the monthly chart? Because each one of these gives us a different pattern. And what's so important for me, and hopefully it's becoming more obvious for you as a viewer, is that when we're looking at these high time frame charts, we see them forming, right? This is a monthly chart. It's only Feb 21. It's not going to be formed until this time next week. But I could see what I want, right? We talked about the if we lose 409, did not happen last week. Sorry, 2 weeks ago. Last week we closed below it. Well, now we have an inverted hammer and we're below 409, which means what? Well, we could start going lower. We now got to move down here to the Fibonacci level I pointed out at 398. And if we don't get a dead cat bounce off of here or more, we are already below our 50 weekly, and the daily chart is going to have to battle for what? For the 50 and the 200 DMA here, currently at, gray line, gray number, blue line, blue number. So we're looking at 39326 and we're looking at 39672. It's converging. It's all meeting. So a little bit of humility would have been great. We start to see signs that the uptrend is crack king versus crack duh. Yes, we changed the trend we're looking at. And that happened on Thursday of last week, right? They gap down, pump it up, and now boop, there's the massive sell. The trend changed. So this uptrend didn't hold. We're still trending up on our secondary one or on that weekly. Hopefully that makes sense to you. So a little bit of humility. Why? Let's look at what this pattern right here is, which is what I was trying to allude to on the weekend deep dive. It's called the Gravestone Doji. Which one are we looking at? We're looking at this one here. Currently, let's look at SPY. This shows us that this is now an inverted hammer. It's not a Gravestone Doji anymore. So where can we see the Gravestone Doji? On the chart I also pointed out on the weekend. This one right here, QQQ, the one that is my primary concern. It's actually only down by 59 cents on the month, or about 0.2%. But this gives me every signal. If we are below the previous monthly high, it's a failed breakout. If it's a failed breakout, it means we had a thrust higher, but the bulls failed to hold it. And now the bears are going for the kill shot. That's what it means. It's that simple. It's a Gravestone Doji. Usually leads to what? Head and shoulders, knees and toes, knees and toes, knees and toes. All right, so Gravestone Doji, definition, how to trade it, and an example. Here we go. Let's do it. Let's just read the key takeaways because that's all I care about. This doji is a bearish pattern that suggests a reversal followed by a downtrend in the price action. A Gravestone Doji can be used as a signal to take profit on a bullish position or enter a bearish trade. Whoa. Okay. So if we have all these strong signals, and we didn't even talk about the dollar, treasury yields, or anything else that's bearish, dollar up, VIX up, yields up, man, that's not good. Everything's down. Oil, gold, Bitcoin, every $1 trillion company. Right? VIX claimed its 50 DMA. There's so much stuff for us to talk about, but I'm really aiming to keep these videos a little bit shorter. And I think the last thing I just want to go through here is just looking at the charts, which currently had either a monthly failed breakout or a breakdown. Breakout or failed breakout. RSP, fail. Right? We look here to the Dow, failed breakout. We look here to NYA or New York Stock Exchange, fail. And these high time frame charts do not get noisy. You have to make sure you track the chart, which is going to provide the clearest message. Failed breakout on the Russell now. XLK, failed breakout. Still green by about 0.4. Again, different weighting for XL versus QQQ, Invesco versus Spider managed ETF, but failed breakout as of now, green in the month. We look here to SMH, same thing as stocks. It just means chips, and chips right now have a failed breakout. Okay, so we looked at the Greystone Doji. Now we have an inverted hammer on SPY, failed breakout. QQQ, failed breakout. Okay, well, that's like pretty much all of them. Oops, sorry, I got here to SMH, failed breakout. What do we have here on ARC? Failed breakout, not holding. All right, next one. XLV, breakdown. That's not even a failed one. That's just a breakdown. Below previous monthly low, even worse. Looking at XLF, failed breakout. Okay. XLE, well, just an inside bar at the low of the candle. Okay. Then we look at XLU, down, just like XLV, healthcare, that's utilities. The DAX is still holding up. This is the only one which is actually still holding a breakout. Every single other chart is lower. So now I'm going to leave you with a little bit of a message of positivity, because I don't want to pretend like I know everything, but what I have is maybe more experience than what you have. And with the benefit of hindsight, you can always say, I shoulda, woulda, coulda. Just stop it. Stop beating yourself up. Start trying to learn from your mistakes. Otherwise, you're very likely going to repeat them. So what I'm going to leave you with is that if you are interested in joining me, Justin from YouTube, we have a 14-day free trial where you can come join, you can copy or try to understand every trade that I make after I log off of YouTube. You can see how am I aiming to make money, because on the worst day of the year, I'm closing out green. I've had a green day, I've had a green week, I've had a green month. I'm beating the S&P by a factor of a lot now. I don't want to talk about what the exact percents are because I'm more focused on my methodology. But if you want to see exactly what that is, join us by going to thealgo.com and consider joining us for a 2-week free trial. Copy all my trades and then quit, leave, never come back if you don't get value. It will not hurt my feelings, but give us a try if you're on the fence, because these next 2 weeks could be quite turbulent. Also, what you get from joining us, we have stock flow, we got dark pool flow, which are these tabs at the top here. Here's something that I'm comfortable talking with in hindsight now. Everyone talks about buying Tesla. Everyone talks about buying Apple. Well, our robot or our algo doesn't care about feelings or emotions. It just tells you when to buy. We got a buy signal on Apple at 131 with a follow-up signal at 134. It went to over 150. We're looking here at a weekly chart. It went to as high as 157. On Tesla, we got our first buy signal on Jan 17 at 125. Our second signal on Jan 23 or the following week, and it went as high as I think like 217. That's a 70% rally. From 120, it's going down, stops going down, and then starts going back up. We got our buy signal right here. So I actioned this trade through QQQ because we had a similar signal. So if you're tired of losing, I feel there's a lot of frustration out there right now. Again, just consider it. If you get a lot of value from these YouTube videos, I think you will be pleasantly surprised by what we deliver inside of our group. And with, hey, 14 free days, what do you have to lose? You got nothing to lose and everything to gain. So if you've enjoyed the video, thank you so much for watching all the way through to the end. If not, our weekend deep dive will now be queued up here on the left-hand side. I thank you so much for watching, and I'll see you on the next one. Thank you again.